What's going on, guys? Happy Friday. So, I figured I'd make a pretty quick video today, just kind of going over Redfin's most recent weekly numbers. So, these are as of July 14th. And just kind of click through some of these metros and even counties and just kind of add my 2 cents to each one and kind of give you my thoughts on it. So, Uh, real quick, I'll just kind of explain the setup and how I like to look at this information, and that is really the top chart drives the bottom chart. And so, if home sales are low, you have a demand problem, which means theoretically, uh, inventory or things like active listings are going to trend higher, which is eventually going to put pressure on the sales price, as is shown below in green. So the Redfin, I want to say, tracks like 400 metros in their weekly data set. So that's what this is capturing. And as you can see, you know, it's still low in the aggregate, I would say, like just from an active listing standpoint, but homes sold is also quite low. And so that's why you're seeing it sort of move up in that direction. Uh, but as you can see, you're not really seeing that in the aggregate affect the median sales price per square foot. And I just want to remind everybody, this is a 12-week rolling average of this information. So, like, if I were to show it as a 4-week average, it's just going to look a little choppier, as you can see. So this is, you're looking at the same information. It's just smoothed out just a tad more. So, I mean, really, not a whole lot to take away from this information. I mean, it's almost like if you were to look at the bottom chart in terms of just price. I mean, it's about as informative as something like Case Shiller, and we know that Case Shiller is very lagged in terms of how useful it is. It's a repeat sales index that is going to only look at existing single family home sales, and it's a valuated index too, meaning that it basically skews the results to areas of the country that are just inherently larger. So think places like LA and things like that. So it's much better just to look at kind of the raw data and what it looks like by metro and to just sort of take those things into consideration. So obviously, not every market is going to look the same, but in order to really get a feel for what's happening in real estate, you just really do have to look at each one of these markets. And I would even go further on to say that even within a market, like I'll just use Nashville as an example, we have 14 counties within the MSA, and each one of those has a bit of its own sort of unique profile. And so even metros, it's worth digging into a little bit more. So that being said, I'll kind of move on and I'll just kind of randomly pick some of these and give you my thoughts. So Austin's one that really gets a lot of attention. It sort of has all of the things that you don't want in any metro area, and that is there's signs of overbuilding. Uh, Net migration has pretty much dropped off a cliff, and look, it slows. Net migration, household formation typically slows in a rate hiking cycle across pretty much every market, but that's certainly the case for a place like Austin. And there are some other considerations as well in terms of just the structure of the household itself and the mix of renters versus homeowners. There's a lot of renters in a place like Austin, particularly in Travis County. So usually, and I would just say too, like a lot of these markets, they're probably going to have a mix of factors that I'm sort of considering when I'm going through it. Uh, and it might be, one market may have more of one thing going on versus another. Austin too. I would just say uh, it's not it's not a bunch of old farts in that area. It's mainly sort of a younger market, which is consistent with there being a lot of renters in that market. And so if you just think about that from a purchasing power standpoint, and how much, especially new construction, has been going on, that one is pretty cookie cutter, I would say. So, and I'll just move on to Dallas, and this is one where, um, again, I'm not surprised to see active listings move quite a bit higher. You've seen a pretty significant slowdown in terms of, again, net migration, people moving to the area, and there's a lot of new construction as well. It's not the worst I've seen from a historical standpoint. If you look, you know, back to previous cycles, it's still outside of historical norms, and I expect this market to slow as well. I mean, and you're starting to see sort of those higher paying jobs uh, really slow down in a place like Dallas. It's not the worst market I've seen, but that's just kind of my 2 cents on that one. Denver. Denver is another one where I've been kind of uh, expecting this market to be very weak, and it has a lot of characteristics that Austin does, especially if you're talking about city center. So that would be Denver County. Just, yeah, I mean, a decent amount of permitting. And even if you were to normalize that over time and compare it to other cities, it's not the worst. But for the area, it's well outside of historical norms. You have a lot of smaller households in this area, a lot of younger people in this area too. Uh, and I think you've seen pretty decent drop off in population growth altogether. Might be, I'd have to double check, but I want to say in Denver County, they're flat or negative for the past like couple years or so, which has just, you know, really worked against it. So let's see, what would another one? I guess we can let's hop down to Florida and look at a place like Jacksonville. Jacksonville has been a market that saw, just like a lot of Florida, a lot of inbound uh, migration. Decent amount of younger people in this market, also a lot of investors in this market. So I was kind of anticipating seeing inventory or active listings break out higher, which will eventually put downward pressure on home prices. But as we know, this cycle has been dragged out significantly. And, employment is softening in this market. It's no different than really uh, across the country. It's not the worst I've seen, but it is definitely slowing. Lots of renters in this market. I mean, there should be sort of a theme developing here. So we can go look at my hometown of Nashville, and if I can get to it, where is it? There it is. So Nashville, really city center, Davidson County's kind of, it has pretty much everything working against it. And it's really not even limited to Davidson County. I could make the argument about other parts of the MSA as well being pretty weak, but really Nashville, Davidson County is really where there's it has way too much permitting and new construction. We have virtually no population growth, and by that I mean like net migration, not necessarily capturing in something like the natural change, which would be births minus deaths. So uh, on top of that, relatively speaking, if you think about it, compared to say like a national number, we're a younger, City center, and you see this not in every market, but city center is younger, and so there's going to be more renters there. Uh, a lot of them are cost burden. There's just more renters in general relative to homeowners throughout history. So we've grown, like the share of renters has grown over time. So when you factor all of that in, whether renting or owning, this, and I've said it again, I think people perceive me as being biased to my hometown. And I can just tell you, I've looked at this at scale, and it has characteristics that are virtually identical, if not worse, than some of these other markets that essentially, in my opinion, got a head start on Nashville in terms of uh, permitting, and even I, you could argue in terms of like changes in demographics too. And so this is going to be probably one of those markets that surprises people going forward, because people perceive Nashville as this like really stable market. It's healthcare, it's this and that. It is, but it's not. We're a more cyclical economy, but I'll kind of save that for another day. How about why don't we look at a place like San Francisco? And this chart is just crazy. I mean, look at there's just real no trend in active listings versus home sales. I mean, home sales are still quite low. And you are, I guess, seeing maybe a normalization of active listings, and maybe that moves higher. I have no doubt that there is just a ton of speculative investors in this area. Not a whole heck of a lot of permitting. Demographics look terrible. Population is just pretty much dead. The only people who are still in, and it really depends on where you're looking in San Francisco and in the metro area, but uh, there's just nothing supports these prices at all. But you also have to factor in a lot of these people don't have mortgages in this market. So a lot of considerations. But hey, prices have stayed crazy high for a while here. Doesn't mean that they have to correct. Uh, but certainly something to kind of keep our eye on here. So we looked at the metros. Why don't we just quickly look at this information at a county level? This is one of the larger counties in the MSA for DFW, and that's Denton County. And this is really kind of more of a, uh, well, I kind of just think of DFW as like endless suburbs and retail strips, but decent amount of renters, more homeowners in this market. I would love to see what investors are doing down here, just because I know that's not something that you can easily get your hands on. I have no doubt that it's quite high, just in terms of all the people who are involved in real estate, just in general in the state of Texas. I mean, geez, RealPage is out of Dallas, so and the state of Texas also, their disclosure laws are obviously quite unique, and so that's why we can't get a lot of that information. Uh, that being said, this is more of a family market. The real kicker here, with especially with a lot of these Texas markets, is it has seen an enormous amount of inbound net migration, which is now slowing considerably. I think Denton is still quite high from a historical standpoint, but it is still slowing. So I don't expect prices to like come down rapidly in this market per se. Uh, but you'll see gradual softening the later kind of we get into the fall and likely early 2025. So, and I'll just kind of quickly show Davidson County, which I was alluding to earlier as being sort of the heart of Nashville. So you can see here that it's just active listings are just a tad higher, and that's because, I mean, our population really is not growing in Nashville, and with all these post COVID sort of side effects we had, you had a lot of people go out and maybe get their own apartment or what have you, and you really saw the household size, whether renting or owning, come down considerably. Now that's reversing because of the financial stress that households are enduring right now with prices being significantly higher. Uh, and we have a lot of speculative behavior in this market, in addition to a lot of new construction. So uh, that will continue to sort of deteriorate. But there's a lot of different ways that you can look at this information, and you can look at components for each market individually, or you can sort of benchmark some of these markets against each other to sort of see where things sort of stand versus maybe like all Redfin metros, which is what I'm trying to do here. And I'm trying to show markets really from all over the country. So the Northeast, the Southwest, West Coast with San Francisco. So just kind of a mixed bag here, and it's no different than kind of what you would expect. I mean, Northeast, Boston, still quite tight in terms of months of supply still being quite low, and San Francisco as well. But you are seeing, and I'm just saying in terms of months of supply, but if you were to look at percentage of active listings with price drops, they are starting to tick up even for those stronger markets of like Boston and San Francisco. So, but it does help to look at each of these markets in isolation to figure out, okay, well, what is actually driving months of supply as an example? Is it low home sales, or is it the inventory component of that equation? And we generally know what that is. But there's going to be some nuance in each market. And that's why it helps to just sort of kind of go a bit further. But anyway, that's just kind of my 2 cents on the latest numbers from Redfin. These are not cut by property type. If you were to look at their monthly series, they do that, which I actually prefer, but this is the most timely data set that they offer. And so I just kind of figured I'd show you this one just kind of at a high level, because I mean, really and truly, what we're dealing with right now is a softening housing market, but the rate of change is really just different depending on where you are. And that shouldn't be really surprising by this point. I mean, if you just think about changes in net migration and other considerations, it's, you know, pretty clear as to what's happened. It's been this work from home arbitrage uh, that is really just kind of an anomaly. And we're now getting to the point where some of these markets are starting to sort of feel the effect of higher rates. And it's just going to take time for this to work itself out. So, okay. I think that's kind of it for these latest numbers. I mean, at the end of the day, the only reason I kind of do this is just I want people to be informed. I'm sick and tired of all these talking heads out there where they're asked about their opinion on real estate, and yet they won't show a chart and they won't be transparent. We need to get away from that, and let's just look at the data and let the data sort of give us the answers or the direction that we need. And so just let the data be your guide, everybody. So yeah, I mean, hopefully that was halfway informative. If you'd like to see maybe a deep dive on your market, or maybe a certain region, or maybe any other requests you have, leave a comment in the comment section below, and hopefully I can maybe address that at some point. Okay.